Welcome to the Accumulating Wealth Podcast. I'm Hunter Satterfield.
And I'm Judson Crawford. We're CPAs, wealth advisors, and partners at Kane Waters & Associates, a financial services firm here to help business owners navigate the decisions they face every day.
Today, we are going to go back to the OBBB and talk a little bit more about it.
And in addition to the OBBB, we're going to talk a little CFP, huh?
That's right. It's our annual College Game Day episode.
Let's go.
All right, listeners, we're back with our college football. College football starts, well, I guess it's already started technically, but the real games start this Saturday. Sorry for the Iowa State and K-State fans listening. This Saturday, Judson, by the time this drops, we're going to have already seen my Texas Longhorns starting 1-0 in Columbus, Ohio.
Well, and the other, obviously we have a few Kansas State fans here at Kane Waters, and they were a little bit embarrassed in Dublin, but maybe more embarrassing, our sweet, sweet small friend Brett Pierce lost to the Hawaiian Rainbow Warriors.
That's right. Well, and you'll have to go listen, or you'll have to go look, listeners, for our pictures. We made some great signs again, some really funny ones this year. So thanks to our team, and then we've got all of our team, not all, but a lot of them showed up in their gear. We took pictures of that too. So go and find that. But Judson, it is time to get to the nitty gritty, right? What's our first category?
Well, I think our first category. So before we pick the playoff, our playoff predictions, and we can go over how we did last year, I think we should talk about some of the games we're looking the most forward to.
Indeed.
So let's start with. You want to start with our alma maters or games we're looking forward to that are not our alma maters?
I would say let's do all our alma maters, which Texas has got some. I mean, we're obviously in Columbus this weekend. By the time this drops, last weekend. We've got A&M coming for the first time in 16 years back to Austin, which will be awesome.
They'll get a warm welcome.
My personal favorite game is going to also be my son coming down. He's now a Razorback. The Arkansas Razorbacks are coming down to Austin, which will be great. And I'd say last but not least, we've got Texas going to Athens, Georgia, which I'm actually going to pick is my most excited game for this year is us going to Athens because I'll be taking my boys. We're going to fly out there. We're going to be in Athens for that game, and it should be a blast. It should be two top 5 teams, which would be awesome. So that's mine.
I get it. I totally get it. And the game I'm most looking forward to for my alma mater is one that I was going to up until a couple weeks ago, and then I'm going on a bachelor party to Ramona, South Dakota, to go pheasant hunting instead. But we are going to the Texas Tech Red Raiders are going to Arizona State. They are ranked number 11 preseason. We are number 23. Obviously, we all know what Arizona State did last year, almost taking it all the way. We actually beat Arizona State at home last year, which was a surprise. And so it's going to be an interesting one. Now, they don't have Scabadabadoo back at running back, but there still should be a good team.
Yeah, that'll be fun. All right, what is your favorite non-Red Raider game that you're most looking forward to?
Well, I think that partially because it is one that's coming up very quickly, and I'm just excited about watching your alma mater, is this Saturday, 11 a.m. Central. You guys are playing at Ohio State.
It's going to be fun. First time, number 1 has been the underdog in the first game of the season, so it should be fun. Mine is going to be the breakup of the A&M Arkansas game away from Jerry World here in Arlington. It is going back home and home. It is in Fayetteville this year. A&M will be traveling up there. I'll be there with my family, visiting our son at that game. It's family weekend. Also, we've got like 10 of us from the office that are going up for the game for as well. So that one's going to be awesome. I love that it's going back to home and home. So that's my pick.
I've been to a few games in Arkansas, and it is a fun, beautiful place to see a game.
Indeed. All right, let's do college football playoff. And listeners, if you don't remember last year, the way this works is we're going to go, we can't pick the same team, but we got to pick 4 teams that are going to make the playoff. Now, last year, we correctly guessed, Judson, 7 of our 8 made the playoff, which is quite impressive.
Well, and I know that I guessed the wrong one.
That was it, though.
And they went way off the rails.
Yeah, indeed. But beyond that, and then you correctly picked the champion last year,
did.
Ohio State.
I did.
All right. I'm going to just go ahead and go first because clearly I know what my pick is here.
Well, I was going to take it from you if you
No,
let
you
me
may
go
not.
first because I wanted to do that for you.
The return of the Longhorns, not to just to the playoff, but we're going to take the whole thing. But I'm selecting Texas.
Okay.
Is one of my 4 teams.
Well, and to keep the theme alive at the game, and one of the reasons, again, why I'm looking so much forward to this game, I think that, based on their division and everything, I think that Ohio State will be back in the playoffs.
Indeed. I would have picked them if you didn't. My second pick is them Penn State Nittany Lions. Got a couple buddies who've got kiddos there. They're going to be legit this year. So I go Penn State as my number 2.
Okay. I'm going to go with an easy pick and pick UGA.
Yeah, that's an easy one too. Those are the 4 easiest. I think from here it gets a little bit dicey because there's a lot of does Florida beat Texas in Gainesville this year? Does Notre Dame? Notre Dame's got a tough schedule. Can they pull it off and get themselves in? So I think what I'm going to go to here is I'm actually going to go to Clemson.
Okay.
Out of the ACC.
Okay. I am going to go back to the true Irish football team, not Kansas State or Iowa State, even though they were Irish this last weekend. And I'm going to pick Notre Dame.
All right. That's a good pick, too. I can't figure out a Big 12 who's going to win the Big 12. That one's really tough. They obviously will auto make it. If you don't pick Tech as your 4th, shame on you. So let me go with, you know what? I'll do this. I'm going to go with the Alabama Crimson Tide.
Okay. That's a good one. And I, of course, am going to pick.
You have to do it.
My Texas Tech Red Raiders.
You have to. Yeah, you got a shot to win the Big 12, which is an auto in. You got to pick them. So, all right, now, who's going to win it all? I already said mine. It's going to be Texas this year. Arch is the guy, and it's going to happen. We've got depth beyond him, so I'm hoping.
I tend to agree with you. I'm not going to pick the same thing as you because that wouldn't be any fun.
Boring.
I'm going to go, and I'm not going to pick the Buckeyes again this year either. I'm going to go kind of out. It's not out of right field. I'm going to go Penn State.
Yeah, that's a good pick. I mean, they're definitely favored
team.
One of the top 2 or 3 to win. So we'll see. We'll report back, listeners. Yeah. But hopefully you have got your couch ready for this weekend. There's 2 weekends. This one, and then I can't remember the other one, but it's a round Ryder Cup too. There's 2 just phenomenal weekends of college football this year.
Yeah, I'm real excited about the Ryder Cup.
It's a golf event, Judson.
Oh, go.
Yeah.
Oh, gosh.
Yeah.
You know what, Hunter? I hope that your Longhorns win it this year.
It's very kind of you.
I really do.
It's very kind.
Real bad.
All right. So we said we were going to go back to OBBB. Actually, this is going to be fun and simple. So I saw a thread on X. We could call him a FinTwit influencer if we wanted. Okay. Good number of followers. And I was like, oh, this is interesting. The way this read is my 10 favorite tax hacks for business owners, now permanent in 2025.
I hope Yahoo wrote this.
No, it's not. It's actually they're actually pretty good.
Okay.
So I thought it would be fun is go through it, and we can actually some of this stuff I think is enhanced by the OBBB. So we'll go through, and I am very proud of us, by the way, because we correctly have talked about almost all of these on the podcast.
How many of these will I make fun of?
No, these are all good.
Okay,
these are all good. Okay. So number 1 is the S Corp.
Scorp.
Just by definition, he just said the S Corp.
Okay. So, which is not untrue.
Yeah.
I would hope that this day and age that most people would understand what the tax hacks are, or hopefully at this point, especially for smaller businesses, I would hope that that it's probably easier and better tax wise to operate out of an S Corp than it is out of a C Corp.
Yeah. So actually, my client yesterday, he had his COO came in and we were kind of talking. His COO was like, "Hey, I've been Schedule C sole prop for a long time, but I think I'm going to convert to an S Corp this year." And so we started talking a little bit about it, like, "Hey, what's your income?" And I think really that's the hack here, right? Is to your point, is if you don't elect S Corp and you're making $300,000-$400,000, that's all subject to self-employment tax. And so converting over to an S Corp, you can pay yourself a lower salary, pay less in payroll tax, and then keep all the distributions or K1 profit without it. Now, Judson, I think a question for you is when's that sweet spot? I know we've talked about it on the pod before, but as an update, like, is it 150 of income, 200? Like, in your eyes, where's the sweet spot on when somebody should convert?
I mean, I've kind of always in my brain said somewhere around $200 to $250,000. I mean, a lot of this depends on pension planning when we're talking to our clients, because there are ways that at lower income you can switch to an S corp and still save on employment taxes. That threshold becomes a little bit higher if you're also looking at pension planning, which we of course are for our clients. So, I would say for most clients that we're working with, probably 2 to 250.
Yeah, I would agree. And I think, folks, before we wrap up on this one, it does take a little bit of planning. So I had another client a few weeks ago. He's been running, had a startup practice. We've been running a little bit of a loss, obviously, with debt and depreciation and things like that. And he is probably going to eclipse that number, around that number you were talking about, next year. So we see it coming. And so the issue is you've got to elect S status by 3/15 of that year for that year. So you couldn't elect this year for 2025 anymore. It's got to be done early on in the year. So there is some proactive planning that needs to be done. So, all right, number 2 is QBI. So he does mention in here, obviously, that the deduction is permanent now. And if you've got questions about QBI, certainly go back and listen to our OBBB episode. But Judson, I think that the nuance here is that QBI phases out at an income level. And I was actually working with a client here recently where he's
400,
ish.
Yeah.
I can't remember exactly the new number, but we had an opportunity to be able to get below that threshold if we bought all the equipment this year, and we free up this free QBI deduction. And so again, I think that's one of those opportunities, listeners, for you to work with your CPA proactively to maybe batch. Now that this is a permanent deduction, if you're around that threshold, try to batch purchases in one year or another and grab QBI one year and maybe not the next, rather than not getting it all because you're above that threshold.
Yeah, and I think that what, if we summarize what you just said, which is 100% accurate, is that actual tax planning matters, and actually communicating the things that you have planned for the year, whether it be equipment purchases, remodels, whatever. It matters when it comes to being the most tax efficient as you possibly can.
Agreed. All right, next is the Augusta rule, which we've talked at length about, renting your house. You want to just rip through this one real quick?
Yeah, the Augusta rule is a tax rule that says that you can rent personal property for up to 14 days tax-free. So this can often come into play for our clients that may use, whether it's a second home, lake home, vacation home, or even their primary residence that's used for business, where you have the opportunity to pay up to 14 days of rental for that property, which paying for that out of your business is a deduction for your business. It then comes to you personally. And if you are renting it for less than 14 days, that is tax-free income to you. I think the main thing for our clients to understand, or that non-Kane Waters clients need to understand, is there are some nuances to this, like, yes, you actually do have to 1099 yourself for that income, or it is not legal. And you can actually get some fines for not doing that.
That's right. I was in Augusta this spring at the Masters, and we stayed in one of these houses that really was the foundation of this rule. And it's a great hack for those folks who are renting their house out, but it can be used by our clients as well. Okay, next one is the donation of stock, which he indicates through a donor advised fund, but you can do it outside of that too, right? You can just donate from your stock accounts. And again, listeners, on this one, if you remember, you buy NVIDIA for $1,000, it grows to 5,000. You've got this trapped capital gain in there of $4,000. If you sell the NVIDIA for $5,000 and then give that money to charity, you've got to pay the tax on the $4,000. The alternative way to do it is you actually just gift the stock directly over to the charity. You get a tax deduction for $5,000 and you avoid the full $4,000. So it's a double hack, a tremendous way to get there. We do this a lot with our clients with our direct indexing, to where we can actually gift appreciated stock positions because we don't own the mutual fund. We own the underlying securities within it. So super cool outcome for folks.
Super cool.
All right, next one, Judson. Bonus depreciation. That sounds really cool. Really, I think here what he's trying to say is look, this is now all the way back to 100% instead of getting phased out 80, 60, 40, 20.
Yeah, because we were down to what, 60?
Yeah, I think so. And I mean, again, bonus is just the free ability to deduct something as much as you want.
Yeah, and I think for our clients, the vast majority of time this matters, or has mattered, is with leasehold improvements, right? You go and you redo something inside your office or something like that. And for a long time, leasehold improvements were, you had to take them over either 15 or 39 years. Then we had the opportunity to where we could take them, more accelerated in a more accelerated way. That started to reduce and then it bumped back up. We actually have a great tax planning episode where we talked about how we can use bonus depreciation, against maybe some other 179 when you may be, doing an office remodel or something else like that. There's some really cool advantages and some tax planning advantages that you should take care of. So, if you are investing in something like an office remodel or building a new building or something like that, 100%. It's something where you need to talk to, somebody here at Kane Waters who are a great tax advisor, because there are a lot of ways that you can plan to where maybe without thinking about it, you get all these advantages over 3 years, and now we can stretch that out to maybe 5 or 7 to where you're really getting a bigger bang for your buck over a longer period of time.
That's right. Since you did such a good job there, I'm going to take this. I'm going to fall on the sword on this next one.
This will be good.
The real estate professional status. Wah, wah. So this is,
by the way, all of our clients are real estate professionals. We understand in your own minds.
Yeah. So this is one that we get all the time. So again, listeners, if you own real estate and you just happen to own one building that you practice out of, or maybe one other property, the issue there is if you're generating a loss, that actually is a passive loss in the eyes of the IRS, and you can't offset passive losses against non-passive income. For instance, your W-2 or your practice income. And so what people want to do is they want to convince Judson and I that they are a professional, a real estate professional that materially participates under the rules of the IRS, so that they can take that non-passive loss and offset it. The passive loss and offset it against the non-passive income. Now, the issue is that none of our clients qualify unless you're really, truly managing tons of properties. You just don't have, there's a time requirement. There's all kinds of other requirements. And so that's why I said wah, as we get this one all the time. And again, the default is you are not a professional in any way. And so therefore those losses do get trapped. Now, the beauty is eventually when you sell that asset, you will get to free those up, or when you have income, you'll get to free them up. So it's just a timing thing.
It's a timing thing. And I think that's the big thing too. And while I poke fun at a lot of CPAs that like to say, oh, well, this is an audit risk. This is an audit risk. Carrying one car on your business is an audit risk, or whatever it is. I think a lot of those things are overblown. I do think this is one that, if you were claiming and taking a lot of losses and claiming yourself as a real estate professional, while at the same time clearly being a full-time professional in another position, I do think there's some audit risk there because it is pretty clear, like you said, with the time requirements, you can't just say, well, I'm a real estate professional.
Yep. All right, next one, I think we can kind of skip over a little bit. It's basically the SALT workarounds. Again, we've talked at length about that. Judson is rolling his eyes in his Texas Tech Red Raider shirt, rolling his eyes. And it is, yeah, we've talked about PTE at length, so that one's an easy layup. Last two, so he says backdoor Roth or just Roth conversions at length, which again, they're permanent at this point. So
no brainers.
Everybody should be doing their backdoor Roth if you can. And again, as we've talked about in the past, Judson, if you've got a year where your income is lower, converting some to Roth or flipping your 401k furls to Roth is a really good outcome. So this is about that time of year where maybe if you've got yourself already in an overpayment position for the year, or you can decrease withholding, or you're finding, oh man, I'm going to buy a bunch of equipment as I head into the end of the year, and it's going to drive my tax rates down. Now would be a great time of year to either consider converting or, again, flipping your remaining deferrals to Roth.
Yep.
If you've already funded 15 of your 23, wow, it'd be great to go grab those $8,000 in Roth and fund a little bit to each, right?
And when do you do Roth deferrals? I mean, again, there's probably an age component here, but you do Roth deferrals when you can afford it and won't affect your other savings.
That's correct. Yep. All right. Last but not least, I actually think this one's really good as well. And so his last one, number 10, was just said strategic timing. And so his point is that now that so much of these things are permanent and they're no longer temporary, Judson, as CPAs and proactive planners, man, we can plan.
Right.
I mean, and that's a huge win, right? Like, I think that we probably overlook that. And we talk a lot about here and how we strategically plan for clients, but the ability now to say, hey, we have permanent law, let's make strategic decisions ahead of time. and build a plan that works for you is pretty cool. And I agree that's a big one. So see, nothing lame in there.
There wasn't
at all. But you know what is lame? I got one of my predictions wrong this year.
You did, and I don't think it's lame because I believe in love.
You do? I see. I don't believe in love. Apparently, they're gonna start a family too, is what I heard.
Oh, really?
Yeah.
Oh no, is this gonna be a shotgun wedding?
It might be.
Our listeners don't know what we're talking about yet,
or do they?
They probably do.
Tay and Travis at this point,
they are engaged. As they said, your math teacher your English teacher and your gym teacher getting married. I don't think so. They are much different than your math teacher and your gym teacher. God, why do we keep saying math? English teacher.
I don't think she could do the Pythagorean theorem.
I don't think so either.
Yeah.
I don't think so either. He definitely can't do the Pythagorean theorem. Yes, there's a lot of it's big news. That they're getting married. I did predict they'd still be together. I can see true love when it's out there. Yeah, real exciting.
All right. Well, Judson, before you sign us off, all I have to say is hook 'em.
Or wreck 'em. Either way. Wreck 'em and hook 'em. The best way to keep up with this is to subscribe to this podcast. That way you never have to miss an episode, and you can go back to listen to all the others. If you're enjoying it so far, leave us a review. You can even tell us what college team you're cheering for this season. We want to know. Seriously. Have a question, comment, or suggestion for a future episode? Drop us a line at canewaters.com/wealth. We really do answer these, and we'd love to hear from you. And if you want to learn more about what we do and we're not recording these episodes, visit canewaters.com to see how we're helping our over 3,200 clients reach their long-term financial goals.